Hello and welcome to the progress. I am Aravind Rajan, and in today's session we are going to study about structure of the banking. The banking can be divided into various segments based on the functionalities of the bank or the person to whom it is going to lend and many other factors. Based on all these factors, the banking can be divided into multiple segments like commercial bank, cooperative bank, or development bank, or the NBFC, that is non-banking financial company. Further, the banking can be classified into scheduled bank and non-scheduled bank. And not all the bank, only the commercial bank and cooperative banks can be divided into scheduled and non-scheduled bank. And under the commercial, I doesn't wrote scheduled and non-scheduled for a simple reason that today all the commercial bank existing are scheduled commercial bank. So I'm not mentioned scheduled and non-scheduled. But with respect to cooperative, both scheduled and non-scheduled cooperative banks exist separately. So what is this scheduled and what is this non-scheduled? Scheduled means nothing but it has been scheduled or listed under the second schedule of the RBI Act of 1934. If it is listed under the RBI Act of 1934, then it is known as the scheduled bank. If it is not listed under the RBI second schedule of the RBI Act, then it is known as non-scheduled bank. If it is getting scheduled there means the RBI Act of 1949 applies to those scheduled bank. Under the Act of 1949, RBI will regulate this scheduled bank. If RBI regulates this bank means this scheduled bank can borrow any money under the repo or bank rate or MSF from the RBI. But if the bank is non-scheduled means that non-scheduled bank cannot borrow from the RBI for the normal reasons. Only this bank can borrow from the RBI only during the extraordinary circumstances. Suppose tomorrow the non-scheduled bank wants to expand its business means it will go through the bank rate route. But for the non-scheduled route, the bank rate route is not applicable. So it can't borrow money with RBI for the normal functioning. And one more thing is RBI, as you all know this, bank has to maintain certain reserves such as CRR or SLR, correct. Under the CRR, the normal or scheduled bank has to maintain 4.5% in the form of cash with the RBI. But for the non-scheduled bank, there is no such requirement. The non-scheduled bank should maintain the CRR, but no need to maintain that with the RBI. Rather, that bank will be maintaining that cash reserve ratio within itself. Excuse me. The bank will be maintaining this cash with itself, unlike the scheduled bank, which is maintaining with the RBI. The another most important thing is the scheduled commercial banks or scheduled banks are part of the clearing house and non-scheduled bank is not part of clearing house. What is this clearing house? I will explain you later. And one more thing is that paid up capital or reserve requirements for the scheduled bank is minimum 5 lakh rupees, and for the non-scheduled bank there is no such limitations are there. And currently there is no non-scheduled commercial banks. All the commercial banks are scheduled. With respect to the cooperative banks, there exists a differentiation of scheduled cooperative banks and non-scheduled cooperative banks. So this is the difference between scheduled and non-scheduled banks. Now, coming to the structure of banking,